are still awaiting pricing from Instacart ahead of its IPO. Joining us now is Mark Mahaney, Evercore ISI head of Internet Research, and Don Short, who is head of venture equity at InvestX Capital. The firm invested in Instacart on the secondary market in 2019. Great to have you both here. Mark, I'll start with you. I realize you have not added Instacart to your coverage universe per se yet, but I guess just walk me through what stands out to you in terms of the S1 and this company going public at this moment in time.
Yeah, so you're right. Well, I don't have an official position on Instacart, but if you read the S1 and we put out a report on it, it's a large market. I call it a TTAM, $1 trillion, plus market. It's highly competitive. There's some very good digital-first companies in there, and then there's some 800-pound gorillas like Walmart that are in there, but they're in there because it's a very large category. And then third, maybe the biggest surprise is this segment, at least looking at Instacart's financials as disclosed, can be nicely profitable because of advertising, but also because of operational efficiencies. And I think the knock on the street was that all of the profits come from advertising, which isn't necessarily a bad thing, but that's what the knock was. But if you look at those numbers pretty carefully, they've obviously squeezed some efficiencies out of just the core business. So that's why I think you see other companies like DoorDash, making a play in here, and Uber Eats too, and Amazon's kind of skated all around it and hasn't quite found the right format. But it's a large market, and you can generate profits. I think that's the real read that I took from the S1.
Okay. Don, my notes here say that you invested in Instacart at $24.50 a share back in 2019. We just heard from Leslie that they're aiming to price shares between $28 and $30. That was according to the latest filing, that could potentially signal that you see pricing at the higher end of the range because there's been a lot of demand. You gonna continue to hold Instacart here, or are you gonna cash out?
Well, we're a private markets investor, so we typically hold through to the IPO or liquidity event, and then we'll either distribute out the shares or sell the shares and distribute the cash to our investors.
Okay, so what does that mean in terms of how you feel about this investment, 2019 to now?
Well, I think a lot of investors wish they used the hype around the pandemic to go public, but from a company standpoint, I think they're probably happier to have used that time to get the business up and operational and deal with some of the challenges that they've had, because Mark is right, it's a competitive business, and I really like the fact that they've added another leg to this stool with the advertising and the distribution channels, to be able to give themselves more options for strategic decisions and strategic moves.
So, Mark, I mean, you touched on it a little bit, the fact that there are other competitors in this market. Even just earlier today, DoorDash announced a list of new partners on the grocery delivery side of the business. How competitive is this market still? I mean, what inning are we in terms of these businesses actually fleshing out?
Okay, I think in terms of online grocery delivery, or let's say omni-channel grocery delivery, because I think buying it online and picking up at Walmart counts too. I think we're probably second or third inning. I think that's probably fair to say. It does require a change in consumer behavior, and I think, as Don pointed out, you kind of had that. That was one of the biggest sort of takeaways from the COVID crisis. People learned that you had this inflection point in demand for online grocery delivery or omni-channel grocery delivery. Because we were required to figure out convenient, efficient ways, safe ways to get our groceries. Anyway, so that's a big boost to the industry. I think that does bring in a lot of this competition. I'm sure it'll, and we've already seen some of this. We've already seen some industry consolidation. I'm sure you'll see more of it in the future. But I think there's a couple of different interesting ways to play that. Walmart, you have to put in that basket of stocks you'd want to buy to play this, I think. And I've been really impressed with some of the metrics that even came out in the S1 about DoorDash. DoorDash has nicely expanded its share in this segment. It's a very challenging business, but I want to get back to the advertising point. This is really impressive because these companies are right where consumers are purchasing a lot of obviously groceries, consumer packaged goods, et cetera. It's really a target-rich environment for marketers, for advertisers who've spent all this money on trade promotions in the stores. I think that's a huge pool of revenue and profits that can come to the real winners in the space. If it's Instacart, the stock will go higher. If it's DoorDash, that stock will go higher. So that's why I find it so interesting to track this.